good afternoon, good evening, depending upon what side of the globe that you're on. What do you guys see? Hi, Keller. Hello, Mauricio, Kareem. See, Lopez, how are you? Keller, Adam, how's it going? FX tips. Good day to you guys. Just a little bit about stop hunters. We have the trading room. Can you guys see what I have on the screen right now? The live trading room. I do live Twitter alerts. It's not the same Twitter account that I use for the general public. It's members only that get the specific buy, sell, stops, targets, etc. A live trade copier where instantaneously my trades copy onto my members' accounts, even if they're sleeping, and they can control leverage according to how much equity they're trading. And now the daily newsletter is free. That's my gift to you guys. I'll give you the link. I do a daily video update. Okay. Let's look at some charts. What do you think? A very weak close in the Dixie. Again, this is something I talked about last week. I talked about that the dollar was going to head down. We had this bounce in the dollar this week. Basically, all we did in here was fill the gap the other day from the gap lower that we had on Sunday night. Shows up pretty clear on the intraday chart. Hold on. Can you guys see the dollar index chart here? This rally that we had yesterday, can everyone see that? This candlestick chart. All we did was rally back to fill the gap from the China rate cut before we started heading down again in earnest. So there's nothing here to tell me yet that I should be looking to buy the dollar. I'm thinking maybe in the next couple of days there's going to be another reaction, but it's my belief that we're most likely going to even challenge these lows before it's over. I'm going to be watching the 78 level pretty closely because I'm starting to get some divergences in Euro, and Aussie is not making a new high with this going on, or Kiwi, so there's plenty of interesting things to cover. This still showing a dollar index chart here. I'll refresh. Okay. So what I find interesting about this dollar index chart is with this kind of weakness in the dollar, and then you take a look at what's happening in crude. Canada's acting very tough, so we've had a very nice week up in crude, right? These 4 days, and Canada is about unchanged to a shade higher on the week. So this looks like 115 is coming here in the crude. It's going to be interesting to see where Canada is at 115. Also, you may want to begin to monitor the copper market. They call copper the metal with a PhD in economics, and they say all bull markets are roofed in copper. You have to be a dinosaur to know these expressions. Maybe March Copper's off the board. And maybe what's going on. No. Okay. So it too is following through, but there's a line in the sand in copper you're going to see in this daily. Not much follow through. If we take out 370, there's big problems. So maybe they could keep this thing going. The S&Ps, I have a number up around the 1370 range. It's about 8 handles from here. And that's when I think we might get some reaction to the downside in the S&Ps, at least maybe not the top, but potentially a top, and that's going to come in a bit higher. So watch the S&Ps when they're trading up around the 1370 level. Does everyone kind of have an understanding of the outside markets and what I've been talking about? You have risk on in a big way, but it's mainly been euro strength, right? It hasn't been, the pound took a huge hit this week. We'll get to that. Normally, with the dollar being under this much pressure, Aussie and Kiwi would be at new highs. They're not. So some of the risk pairs not making new highs when the S&Ps are 13 in the 1372 range or so could be very good shorts. And I think that the euro will be too for at least a correction. Also, I believe that the yen is in a correction after the big first 400 pip move. And we'll get to the individual pairs now. Any questions before I move on to the pairs? Kareem, the only one participating here? Okay. Again, my website address and the services that we offer. Okay. We'll get to the yen in a bit. Okay. Wouldn't you expect with what crude has done that Canada would be at new lows? I mean, we've had a tremendous rally in crude, and here's your daily. Got some decent divergence here. When we made new lows on Monday, the whole world that was shorting Canada, people who buy headlines today sell newspapers tomorrow. Okay, so definitely that gap lower that we had that was here on the rate cut, we've more than, filled it and then some, and crude continues to move up to new rally highs, and Canada is not at new lows. So I'm thinking when the S&Ps are in that range that Canada may not be at new lows and set up a higher low to buy into sometime next week. You probably check with our website or so forth with those developments, but I am impressed with how Canada is holding up. With the dollar being weak, that should work against it, correct? Can I get a Y in the room if you understand that? The dollar's really weak. This pair should be going down. Crude's going up, right? This pair should be going down. So I asked myself if Canada can hold together when the outside influences and the correlations that normally work are not taking it down. What's going to happen when crude tops and starts to come down, or the dollar reverses its weakness and begins to correct? So I'm looking for reasons to get long Canada. You probably have a lot of stops, beginning to build above it. The pound was a very interesting short that I took and tweeted. Up here was the rate cut. Okay. This was a non-confirmation, so I put out sells up here at 58.70. Of course, I didn't ride it all the way down, 7.5. But this is pretty negative action in the British pound. I'm going to be interested to see exactly what happens here during this next phase. To me, it looks like there still is potential for, even if the pound is still good, that after a bit more of a rally that we could still trade down maybe around the low 155 range. So I'm going to be looking for reasons to get long down there. Okay, so that's going to be, there most likely is some type of rally to sell before we get here. This is becoming a pretty good two-sided market, so learn how to trade and not marry anything. Date things. Okay, get engaged. Don't get married. Except once we're up at 1372, I think we're going to have a pretty good dollar rally. So use that as your benchmark to key off of, because we could pull down towards this 155 level, and this could just be correcting this big advance that we had here, and then the dollar weakens again, and the S&Ps, after they correct from 1370, begin to blast off again towards above 1400, which I think is possible going into the end of March, maybe into the spring equinox. So that's something that I'd be looking for, places to buy the British pound around that 155 level, but most likely there's a rally to sell first into this decline. If you understood that analysis, please give me a Y. I could wait. If you didn't, give me a no. Okay. So what isn't really clear, man? What I'm saying is, when you look short term on the hourly, we had massive divergence on the news. You know, I'm not a big believer in going with major news. It's my belief that the markets are discounting mechanisms, and that's why when the news came out and we gapped up here, and I saw that we were diverging in the pound and we were making lower highs, I was able to short it with stops over this high of the move. Okay. Now I think that we're most likely going to trade down to here in the coming days, weeks, and then the potential for another good rally exists. Did that clarify it for you? Well, not always. What you're going to want to do, and I teach this, is you're going to want to start following this pair, okay? Because they don't always go together. This is a spread between them, the EG. And when this is going up, you want to favor the euro on the long side and the pound on the short side. The other way around, when this pairing is trending down, you sell the euro on rallies and you buy the pound on break. That's what was happening here. What's happening here is different and may continue for a while. How about that? That's why they have this pairing. Okay? So I actually trade the EG, but if you don't trade EG, at least watch it for which way it's trending to know if it's trending up, you favor being long euro and short pound. Okay? And when it's trending down, it favors being short euro and long pound dollar. Did you learn something today, man? Because that's what we're here for. If you're guessing, that means that's no. You didn't learn anything. Do you follow the EG? Okay, well I'm a speculator, I'm a betting man, and I think that from this day forward you will. Who seconds that in the room? That Mans will start watching EG. Anyone else going to start watching EG? Okay. So moving on to the euro, the RSI is over 70, but we are diverging here, and we are diverging on the 4-hour. I think we're getting close to a short-term top between here and 134 or so for reaction. It's going to be interesting to see if the S&Ps get to my target where the euro is. But do I want to short something that's making a new recovery high, or do I want to short something that might be making a second lower high, or something that's 140 pips like Aussie away from new recovery highs? So it's my preference to short something putting in a failing rally. Yes. Right. Answer, yeah, I agree. So, it is a bit unusual for the euro to be outperforming Aussie. Do you guys agree with me? So I think Aussie is saying that we're getting close to some type of somewhat significant high in the S&Ps where we could get maybe a 7% sell-off. Maybe we go 1370 and then go 1300, 1320, and then 1415 on some blow-off. That's just my best guess, my notes for Pinkert. Everyone get that? Yes? because they've taken out the bears over this high. In my writings and my video reviews, I let members and visitors know that I thought we were going to take out this high before we had a good sell. Now you have a little bit of a three drive formation beginning to develop. It's done nothing wrong yet, though. So you're probably going to want to look at some fibs. You know, some people are talking much higher levels. They're talking, 135, 137. There's a scalp coming, though. Here's U.S. dollar yen. Looks like an ABC to me. We have confirmed highs. Maybe we work all the way down to some of these levels, the 70. I know a lot of people are looking at 78.5, maybe 77.69, but you can't rule out because of the high relative strength reading on the 4-hour and the 1-hour. I mean, you have readings here that were actually confirmed at 80. But should the yen be able to garner some strength here and rally and test these highs or take them out, there'll be some very glaring divergence that'll set up a better selling opportunity. Any questions on the yen? Same type of scenario setting up in euro yen. Euro yen, unlike euro, is diverging under 70 for the second time. So this is setting up a nice little short, in my view. Guppy yen is showing a lot less relative strength. I don't want to get short in the hole. And what bothers me about this is it did confirm the high on the rate cut. Quite a difference from the pound not confirming the high on the rate cut on the 4-hour and, of course, back on the 1-hour, whereas Guppy yen did. So this has me a little bit hesitant to want to short this because what have I renamed the RSI? Anyone know? If you want to know, I have an explanation of it on my website. What did I rename relative strength index? Anyone know? Real simple implicator. Ganster was close. Not indicator, implicator. Because of what it implies. So new highs imply down the road another new high's coming because it was confirmed. Just like in Swiss, right here, on this break, we had a confirmed low. What happened? We bounced and we got another low. We're beginning to diverge again, but pretty oversold. So I use RSI for two purposes, for letting me know if I have divergences, and if I have confirmed highs or lows, it tells me I should look for another higher low and position myself for those events. Can I get an amen in the room? Confirmed highs and lows are rarely the tops or bottoms of the market. So having that information tells you how you should set up to trade reaction. After a confirmed high, you're looking to buy a pullback because the probability of another high coming, whether it's confirmed or not, is fairly high. Nothing works 100% of the time, but there's a higher probability of another high. Just like earlier in the day, I had some members saying, well, what about euro? That was on this pullback here. And I said, well, it bothers me. It's a confirmed high over 70. I think we'll get another one. So the way to have treated it was to buy the pullback, looking for another high that 73, pretty close to confirming. There's really no divergence there. Okay. Moving over to Aussie, like I was talking about, we're still pretty far off the highs of 108.40. Again, Aussie acted pretty weak after that rate cut in China. It had a pretty dramatic sell-off, maybe equivalent or not quite as dramatic as the pound, but it certainly is much weaker than euro and much weaker than yen. So it's going to be interesting to see how much juice we get out of this to the upside. You know, I could still make cases for, you know, 110.50, 111.50 before it's over, but there might be one trade up here when the S&Ps are 1370. And this was another classic. What was this formation down here, Kareem? Right. Yeah, that they work off their overbought readings, bull market. Yeah. Falling wedge is one reason, but we also had what? 1, 2, 3 drives to a bottom, and yesterday's low in Aussie, one of our members picked it up in here, and it was a 3-drive formation for the third drive. Shows up on the 4-hour, shows up on the hourly. 1, 2, 3, and the third drive consisted of 3 drives. So actually the 3-drive formation is the logo of our website, stophunters.com. Kiwi is showing a little bit more relative strength than Aussie. Up in here. The preferred short probably is going to be an Aussie. And finally, to wrap things up, guys, it's Swiss is really looking ugly. In fact, what's interesting is when the dollar was getting a good bid with USD CAD going up and the pound getting hammered, this is all the Swiss did. It could not rally. It could not rally. So now we're approaching some short-term targets. I can't get long Swiss yet. There are potential targets as low as back in here, the 85 level or so. You know, and that would argue for, you know, 139, 140 euro. So the way I'm prepping for next week is keying off the S&Ps and looking for potential buy opportunities in Canada, maybe around this area. Pound, there should be one decent rally to sell, and maybe here, maybe early next week when the S&Ps reach it, and then perhaps we trade down to 155 or so. And maybe on this next pop in the dollar, euro acts a little weaker than pound dollar does. Yen, I believe this is the beginning of a pretty good bull market, but very possible that we get this pullback towards 78.50, 77.90 or so in the coming days or weeks, and then we make another push up towards, you know, this was a 400 pip rally. So we could have a 600 pip rally, take it up to 84 down the road. Okay. And I said I promised you guys a gift. So let's see. Here's a link to the daily update, the video update I do on my site. Here against my website and the services. What's your most precious currency, guys? What time do I do what, CS? The room? The room is, huh? Seconds. Oh, the free update, I usually do it after the close, after the New York close. I think they're, I don't know, 7 minutes, 7 minutes. Give you some ideas. I don't give specific entries for obvious reasons. The room is from 8 a.m. Eastern to 2 p.m. Eastern. And the private tweets are all day long. And the trade copier is pretty cool. So that's about it. So thank you everyone for your attention. I hope I gave you some ideas for next week. Thank you, Mauricio, for moderating this. You're welcome, everybody. Oh, it's been recorded, huh? Okay. See you guys. Good hunting. Adios.